Well, basically, it's a bit of a wordplay. So what we've seen in the last 4 to 5 years is a lot of enterprises been very interested in the value proposition of blockchain, but they were not willing to do the trade-off. The trade-off is utility tokens, public blockchains where people can go in and read the data, exposing that data and those things. The thing is that what they've seen is that the total cost of ownership of running these private permission blockchains is too big compared to the benefit. And now they're looking outside into these very large public permissionless blockchains such as Cardano, and they're seeing there's a lot of value because it represents a new security architecture of the internet, and it allows them to trade and commercialize different business models with people who's not associated with the company, which actually is what normal businesses do. They deal with different stakeholders, different clients outside of the protective remits. So therefore we've seen this change happening, and combined with that we've seen some regulatory clarity coming in, and we even see regulators now asking for open source software enabled blockchains, but also public permissionless blockchains, because even the regulator sees some added advantages by going in this direction. So first of all, we don't look at one country or one regulator. What we try to say is that Cardano is open for everybody. That means that everybody should be able to participate in Cardano from whatever country, or even if you are not belonging to a country and you don't have an identity, it must be possible to use this new public infrastructure. However, that also means that we need to respect the capital markets, tokenization. DeFi has been one of the largest use cases up until this point. And that means that a lot of regulators has been looking at it with KYC and AML perspectives for how we look at capital market instruments. So what we tend to do right now is we respect that reality, we respect the current regulations, and we answer public consultations, we engage with regulators and policymakers, we try and educate them about the differences between the first generation blockchains who had all of this success in capital markets and third generation blockchains which has some new features. One of those new features is that asset representation is not just a financial asset, it can be everything from data to identity. And that opens up the space for new use cases, and the regulator and policymakers would like to see those use cases. They would like to touch the blockchain. They would like to feel how that brings new employment, new opportunities, how it brings growth to the constituency they represent. And that's really needed right now today for the next generation of blockchains and create that adoption. Well, for Cardano right now, everything is very green. So we see that net new wallets are increasing. We see new applications are launching every week. We see double-digit growth of companies betting on Cardano. We see that we are able to do real applications across multiple industries. But in essence, it's not about Cardano. It's about third generation blockchains. And what I think we will see is that with the boom of AI right now, AI anchored on top of a blockchain is much more powerful than AI who's just have random data, because you're able to put the computational layer into it. And that basically means that I think with the trends we're seeing right now, you just see an increased adoption around blockchain for enterprises instead of enterprise blockchains as we saw before.